This video highlights the BCGE Group's results as at June 30th, 2023, as well as its priorities and outlook for 2023. The excellent economic performance in the first half of 2023 confirms the responsiveness of the bank's business model and strategic positioning in a contrasting economic environment. Private and corporate clients are growing steadily, operating costs are contained, the cost of risk is modest, and operating profit is up sharply. Key performance indicators show a positive trend. The increase in assets under management and administration, as well as in mortgage loans, demonstrates the bank's competitiveness. Its productivity is comparable to the best Swiss universal banks with international operations, as is profitability when measured by return on equity. Lastly, the bank's equity capital coverage ratio is at an optimal level and above the minimum requirement. Revenue rose sharply because of the bank's successful strategic orientation. Operating expenses, which will be mentioned later on in this presentation, reflected the group's investment dynamic. As a result, operating profit rose sharply. The bank achieved remarkable revenue growth over the first half of the year, adapting as effectively as possible to the change in interest rates and minimizing the impact of the stock market on its fees. The bank's business model is well diversified, as demonstrated by an analysis of its revenue. BCGE is a major financier of Geneva's economy. The bank granted 18.8 billion Swiss francs in loans to companies and individuals, an increase of 269 million Swiss francs. The share of mortgages show a high level of asset diversification with a weight of 44% of the bank's balance sheet total. Client deposits rose 2.7%, approaching 20 billion Swiss francs, giving the bank a high mortgage cover ratio of 150%. This increase demonstrates how attractive a safe bank is amid economic uncertainty. The gross interest margin grew significantly by 48.5%. At 192.9 million Swiss francs for the first half, it represents a record level for the bank. Growth in financing volumes and yields, combined with an efficient ALM strategy, enabled the bank to rebuild its margin rate. Commissions held up well in the face of contrasting market conditions, with securities commissions down 2.8% and credit commissions down 13.1%. Other commissions rose by 13.9%, reflecting growth in business with private individuals. They now account for 23% of total sales. Assets under management and administration for both private and institutional clients grew to more than 34 billion Swiss francs. The positive net new money from best-of management mandates and synchrony funds once again attests to the bank's excellent competitiveness. The bank is maintaining its pace of investment, particularly in technology, IT security, and energy optimization for the benefit of its clients. Additionally, BCGE is continuing to modernize its branch network. In the first half of the year, the bank created 13 new positions, bringing the group's total workforce to 887 full-time equivalent employees. Shareholder equity rose steadily by 3.76%, crossing the symbolic threshold of 2 billion Swiss francs. The capital adequacy ratio rose accordingly to 16.9%. BCGE is one of a select group of well-capitalized banks, as demonstrated by its rating from the rating agency Standard & Poor's. The number of shareholders remained stable in the first half. With more than 15,000 shareholders, the wide distribution of the floating portion of the capital is an advantage. 83% of shareholders hold between 1 and 50 shares. It should also be noted that 80% of BCGE employees are shareholders. The BCGE share rose sharply by more than 20% in the first half of the year. Depending on changes in shareholders' equity, the share value is gradually adjusting to the intrinsic value of the share, which stands at 285.8 Swiss francs. Given the results and the quality of the rating, the share's upside potential remains significant. BCGE creates value for all its stakeholders. BCGE is committed to a long-term approach, whether for shareholders, clients, the community, or its employees. Over the last 3 years, the significant increase in share value, including the dividend, of 26.4% and the financial contribution to public authorities of 183 million Swiss francs are particularly noteworthy. More than 13,000 private and corporate clients have joined the bank, and it has created 90 jobs in recent years. On the left-hand side of the screen are the challenges that were presented at the annual results presentation in March 2022, and on the right-hand side, the bank's achievements at the end of the half-year. The bank believes that the main challenges have been successfully met over the last 6 months. The bank has defined 7 strategic priorities for 2023 to act as a key partner of the Geneva economy and be the leader in mortgage financing in a persistently high-price environment. To build on the bank's success in the field of private banking, thanks to a focused and high-performance investment philosophy. To develop certain niches in the asset management market. To be a major contributor to the influence of Geneva's economy and trade. To promote banking digitalization and assist clients in the energy transition process. In 2023, the bank continues its commercial expansion and to capture the dynamism of buoyant economic sectors. It is able to do so thanks to the diversity of its expertise and the alignment of its business model with the specific demands of the Geneva and Swiss economies. BCGE believes that its strategic orientation is conducive to the growth of high-value-added business. The bank's financial strength makes it a stable financial guardian. The bank carefully notes any change in interest rate trends and advocates a prudent credit policy. The bank aims to develop business that requires little equity capital and is expanding its corporate offer. Barring a deterioration in the economic situation and taking into account current business developments, the bank expects overall earnings for the year to increase.